Well, hello, friends. Hey, it's Jamie here. I hope you're enjoying a wonderful first unofficial day of summer now that we're through Memorial Day. Wanted to talk to you today about the summer shift. We've been talking about this a lot with clients as well as friends of the business, and the early signs that we're seeing, many listings that we have as well as those that we're going after, we're seeing fewer offers on them. We're seeing less escalation and less waivers, less aggressive offers that are out there. We're seeing growing days on market on many of the listings that we're going after for buyers. We're seeing price reductions, whether those are ones that we negotiate for buyers or we're seeing just offered on listings. We're definitely seeing those. And we're also seeing canceled listings. Sellers who bring their property to market aren't able to get the price that they want and decide, nope, I'm not going to sell, right? So those are the classic signs of a shift, and that's what we're seeing right now. Now, why is this happening? There are several factors. First and foremost are interest rates. Over the last 6 to 12 months, they're up 1.5%, right? That has created 15% less buying power for the same monthly payment for buyers. That's substantial. Right? We're also hearing people talk a little bit about inflation concerns as well as return to office concerns, right? Whether, not knowing exactly how quickly they're going to need to return to office and how that might affect their plans to move further away from the city or closer to the city, right? Now, what are the opportunities in this market? Well, frankly, for people who are looking for a larger home, looking for a smaller home, or looking to move around, this is something, this market, having still a very strong seller's market, but more inventory to buy creates a better opportunity. Now you can bring your home to market and feel confident that not only you're going to be able to get it sold, but you're going to have a reasonable amount of inventory to buy on the other side. Likewise, it's a great opportunity for many first-time buyers who felt alienated by competition in the market. Today, there's less competition. You have to take less risks. You have to have less of a down payment. You don't have to be as good as what you did a year ago or 2 years ago, so there's more opportunity for you. And even though prices are relatively high today and interest rates are high, this is still a good inflation hedge over the long term, because if you're renting right now, you're going to see those rents continue to rise, and they're going to lag inflation because those landlords need to build in their higher costs over time. Now, what are the threats? Well, the threats predominantly are to anyone who's buying property right now over a very short period of time who isn't getting just a screaming deal, right? So let's look at that. We expect over the next 18 months or so, maybe even 24 months, to have some price and rate volatility, right? Now, how do we hedge against that, right? Well, the first one is having a long enough ownership time. What we know is that if you can own real estate at least 5 to 7 years, you've outlasted all but the worst of the downturns, and the worst of the downturns extended that somewhere between 7 and 10 years. 10 years being if you bought the absolute most compromised thing, a small condo in a very densely populated place, right? The other thing is we can hedge against increased rates. Let's say that rates don't go up as much as what we think that they would, 6 to 7%. We can hedge against that through refinance. Refinance, let's say rates go down to 4.5%. Well, that point drop would definitely make it worth refinancing from 5.5% down to 4.5%. You'd likely break even on the cost of refi within about 18 months or so, which is a great deal. Again, if you're holding the property for 5, 7, 10 years, right? And then finally, due diligence. And this is where it all starts, right? No matter what the market is, through proper due diligence, proper strategy, you can get a good deal on that real estate for the longer period of time. It really depends on what your motivations are, and that's what we can do to help you get through it. So what's next? First thing we want to do is answer any of your questions, right? If you are thinking about moving right now, we'd love to have that conversation with you to figure out, is now the right time, what strategy would work for you. If you're a little bit more on the fence, would love to know if you'd like a seminar, right? Whether that's sips and tips, we can get back to a winery or a brewery or something like that, have a drink together, talk for half an hour or so about what's going on in the market and answer your questions along with a group of other friends of the business, or we can do it online or hybrid, right? So if you're more comfortable with that, we'd love to do that. If you're interested in something like that, please let us know. Would love to put that together here over the next couple of months. And then finally, I just want to wish you a really wonderful summer. We certainly lived through a very rainy spring, so I'm hoping that as the sun comes out, you can enjoy the Pacific Northwest for all of its splendor, and that we get the opportunity to connect with you and hear how you're enjoying the summer. Thanks for watching, and best wishes for a great summer.